Welcome back to Figuring It Out. My name is Melody.
And I'm Mr. Money.
And today we actually have our very first sponsor on Figuring It Out.
Woohoo!
And our very first sponsor is actually UOB. And they came at a perfect timing because I'm about to learn how to start investing, which is also why we have Mr. Money on our studio today. We're just figuring it out.
Ching ching!
Okay, who better to ask than Mr. Money himself, right?
So what can I do to help you today, Miss Melody?
Okay, so for beginners like myself, the first thing we'll do is actually Google everything we want to know. But the problem with Google is there's so much information on Google. I don't know where to get started.
Oh yeah, I totally agree with it. I remember when I first started investing that time, it was disastrous.
Exactly,
Yeah.
You get my point.
Some more, my time, not so advanced like today, you know. So imagine, right, you get information from everywhere and then everyone got their different advice and it's so confusing because you don't even know how to start. You don't even know who is giving you the right advice and wrong advice.
Correct. Wait, how do you even do it?
Okay, so I was very grateful because during that time, one of my friends, actually he's the current show host as well, right? Frankie.
Oh.
So he started off as an investment banker. And so he was one of the first few guys that I went to when I wanted to learn how to invest. And he gave me a brief explanation, although I would argue that that brief explanation didn't help much. But the next thing that he did was that he pointed me to one very important thing. He said, just read newspaper every day. So I started reading newspaper every day. But that learning journey was very different because it kind of gives you about 1 month of just learning everything without knowing why you're learning. And suddenly it just makes sense.
I see.
So it was difficult. Yeah. But I would argue that today you don't have to go through such a hard road.
Thankfully,
Yeah.
I haven't picked up a newspaper in a really long time.
Today it's much more step by step. And in fact, that's what I've been doing on my channel, right? So you've got the right person. Let me help you break it down.
Okay, so I'm pretty sure you know that as fresh grads, we don't really have much money to begin with. So because you already know I don't have much capital, how much do I actually need to get started for a beginner?
That's true. In fact, I think that's a very good first question to ask because if you've got no money, how do you even start investing, right?
Yeah, you
So
cannot
before we
start
talk about
with thin air, right?
Yes, before we talk about all the different assets, let's talk about how much you need first. Okay. So the first thing is this. I would suggest that if all you have is the money to invest, then you better don't start first.
Why?
What do I mean by that? Okay. You see, when you're investing, your money is actually locked into something. And you can't take it out for a period of time.
Oh,
Yeah.
That's actually, so if I have no emergency savings, then I'm screwed.
That's right. So if you do not have any emergency savings, so imagine you put in your money there and then 2 days later, your tire puncture and then you go like, oh, I need to pull out my investment. That is not good at all. You may end up losing money during that period of time. So I would always advise people to start investing. The first thing is to get your finances right by having a sufficient emergency fund. Ideally, about 3 months to 6 months of emergency fund ready. Then the remaining money, you can think about investing.
I see. So how much do we have to put aside for investing in that sense?
Now, once you count your 3 to 6 months of emergency fund, right? It means you already have excess cash. Then whatever you save up every month right now, you can start investing.
Oh, okay.
However, let me just put another caveat also lah. I would say saving up 3 to 6 months of emergency fund also not that easy one today.
Yeah, I can barely save. But I'm still trying my best.
Because inflation, everything's so expensive. So what I personally did was I did not wait for 3 months. I first saved 1 month first. So let's say my salary was about 3,000. I saved 1 month of income. So that took me probably about like 3 to 4 months time. Then during these 3 to 4 months time while I'm saving for the emergency saving, I'm learning about investment.
Oh.
Okay. And then subsequently, once I hit the number, every month, the money that I set aside, let's say it's 500 ringgit, I will set 50% into the emergency fund. The other 50%, I will start using it for investing.
I see. So you build the habit of saving first.
That's
and once
right.
you've hit your goal or your target, then only you split it up to be investment funds and emergency funds.
That's right.
Oh, so it's more safer.
That's right. And I would say that having some sort of an emergency fund and good habit, right, helps you a lot in your investing journey because you will not suddenly get into a situation where you feel very headache, very stressed, like you don't know where to find money, that kind of thing. So you will have this certain sense of assurance that you are okay to bear through the risk that you need to bear through as you invest.
I see. Okay, so let's say if I already have money saved up in my emergency funds and investment funds. So how can I actually use that money to start investing in something that is lower risk? Because my risk appetite is actually very small, but at the same time, I want to tap into the investment market.
All right. I would say that when we look at risk, right, the first thing that you want to do is to ask yourself this thing, right? What is high risk and what is low risk? Yeah.
How would you classify what is high and what's low?
Okay. So traditionally, all of us classify risk in such a manner where we say that, let's say if it is stocks, then it's considered high risk. Let's say it is fixed income, then it's considered low risk. Or either bonds, then it's considered low risk. I personally think that risk should come in the form of many other considerations, not just asset classes, but also time. So for example, if let's say you have a longer time to save, like assuming right now you are definitely in your 20s, early 20s,
Yeah, correct.
and you're saving for retirement, let's say it's at 60, which means you have about 40 years, almost 40 years. And as the market go up and down, right, you actually have that time buffer to what we call ride out the market.
What does that mean?
Okay, so you think about it, right? A good quality asset, which means that if you choose a right investment tool, it will generally go up in value over a period of time. But that doesn't happen in a linear fashion, which means that it's not going to be today it is 1 ringgit, tomorrow is 120, the third day will be 130, and then after a while it become 10 ringgit. It never go down. It doesn't work like that. For most of the investment, most of it, and especially those with a decent return, right, will generally be like today 1 ringgit, tomorrow 120, the third day maybe 80 cents. Then the fourth day may climb up to 90 cents again. Then it will go back up to 110. Then it go back up to 120. Then it drop a little bit back down again. Then it go up again.
So it's like roller coaster.
That's right.
That's very risky.
So you will feel that it's risky when you just zoom in that period of time. But if you look at a longer time period, let's say if this year the price is 1 ringgit, 5 years later the price is 2 ringgit. Is that risky?
I cannot predict the future.
So here is where you need to select quality asset. But this one we'll talk about it shortly. So let's just talk about this part itself, right? So if you have a strategy that allows you to capture this return over a period of time and lower down the risk, that is what I would consider low risk.
Then what is the strategy? Like, how can we come up with a strategy?
Now, have you always heard of people telling you this thing, right? Yeah. Hey, Melody, I invest. I just made a lot of money. I buy at the low price, then I sell at the higher price.
Oh, I know. People always say buy the dip.
That's
Is
right.
that buy the dip?
Yeah. So that is what we call trading.
Oh, trading is a strategy.
Yes.
I always thought trading was like a form of investment. Like something. Okay, I understand.
No. So trading is not a form of investment. Trading is actually an investment strategy itself. So what happens is that when you see the price is down, then you buy. And then when the price is up, then you sell. Then you need to predict when is it going to go down, when is it going to go up.
But I'm not some kind of wizard. I cannot predict the future. I also don't know when it's going to go down. How can I buy when it's down?
Precisely. And that is why 90% of the people who trade actually lose money.
But everyone say trading earn money. Then, okay, if trading is not for someone like me who's not a wizard, then what can I use other than trading?
For most of the beginner, I would suggest you to actually use this strategy called dollar cost averaging.
What's that?
So how it works is that every month you set aside a fixed amount and you just invest it into an asset that you believe is good. So for example, if I can set aside 250 ringgit every month, I will just decide on, let's say, a unit trust that I think will do very well. I'll just put 250 every month into it for the next 3 years or 4 years.
I see.
So imagine when the price was going up and down that time, I would just capture it at different price range.
Okay, so
But-
I don't care even if it's up or down every month as long as I consistently invest 250. It's a much safer strategy compared to trading.
That's right. Because you think about it, after 5 years, I'm capturing an average price.
Oh.
So
No wonder it's called dollar cost averaging.
That's
Okay,
right.
okay, I get it.
In fact, that is a strategy that not just beginner use, but many advanced investor like myself uses it. A big part of my investment portfolio actually was accumulated from dollar cost averaging. And
Wow.
let me tell you what's the benefit of it, right?
Okay.
I have many friends who are trader, and until today, because I've done it for like a number of years already. So whether market is up or down, right? My portfolio is still making double to triple digit earnings one. So imagine
That's
when people were talking
crazy.
about like market crash. Remember the last round when
Yeah.
the whole market crashed that time?
Yeah, like few weeks ago.
Yeah, just about a month plus ago, lah, right? Yeah. My portfolio is still green color.
Wow, that's very impressive. Everyone was literally scrambling because they were so scared.
That's right. And because I have that green color there and I already built a habit, I won't panic sell or panic buy. I'm very relaxed when I invest.
That's actually very rare because a lot of people emotionally invest. I see. Okay, but I already understand why people have to actually dollar cost average when they invest. But since I already understand the concept, how can I actually get started? Like, which one should I pick to invest?
All right. So now that you already decided what kind of strategy you're going to use, right? Then now is the time that you need to learn about asset classes.
What's that?
Yeah. Asset classes, which means what type of investment to look at. So naturally in the market, there are properties an investment.
I definitely cannot buy that.
Yeah. But it is an investment and you can learn. Now, you can buy it via what we call REITs as well, which is a real estate investment trust, which owns property and manages it and then gives you dividend, right? So that itself is an asset class.
Okay.
Now, you can also choose to buy companies via stocks. So when someone say buy stocks, what they meant is you are buying the ownership of a company. Then there is also ETF, which is actually an average of many stocks. Yeah.
So stocks, like the one you mentioned just now, is one specific company. ETF is like probably like 10 different companies.
That's right. So like what you hear about S&P 500.
Oh, yeah, I know that one.
means an average of 500 US companies.
So you're just super diversified.
Yes. So every $1 you put in, you're actually invested in 500 companies.
Okay.
Now, then there's the other one called unit trust.
What's that?
This one you definitely heard before, like unit trust, but most people don't quite understand,
Correct.
especially beginners, right?
Like
what
I've
is
heard
it?
of it here and there, but I don't really know what they do.
So think about it, right? If you are someone who wants to take a bit more risk, you want to have an investment in stocks, but you do not know how to invest. Can
Yeah.
you hire a professional to manage the stock for you?
I don't have that kind of money. I already know money to invest. How can I hire a professional to invest for me?
Here is where unit trust comes in. What unit trust does is they actually have a professional fund manager who manages an investment portfolio.
Doesn't mean that it's going to be super expensive.
Nope. So why is it called unit? Is because based on that, they break it down into small units and sell to retail investors like yourself. So think about it. If I am a fund manager, I manage, let's say, 100 million ringgit of funds. And I will use that money to buy stocks, invest, and make returns. And then I will cut it down into small units and I sell it to retail investor like yourself so that you can participate in it. So instead of you one person, Melody, hire me as a professional fund manager, there are many Melodies
Wow.
who actually put their money together and hire me as a fund manager to manage this money.
Oh, then means even a beginner like myself also can try unit trust.
That's right. So it comes down to yourself when you look at all these different asset classes, which is the one that you want to invest. Yeah. So have you read about all these different investment classes?
I have, but there's still so much information. I don't even know where to get started. Like crazy. Like every single link I click to is something different, something new. Like now I know a little bit more about the different asset classes that you've mentioned. Like I said, it all sounds great, but like where can I actually get started?
Let us continue with this journey. Just now we talked about it already. Before you start investing, you actually need to have some emergency fund first,
Correct.
right? Then once you have that emergency fund, now you're thinking about investing, you need to decide on a strategy to invest. which we talked about, a suitable one will be dollar cost averaging. Right? Now, the next thing is you need to decide on the asset that you want to put your money into.
Yeah, this is the scariest one. Like, which one is most suitable for me? Or like a beginner?
That's right. So in this step 3, let me give you a brief idea of each asset class, how it works, and then how will it be suitable for yourself.
Okay.
Okay? Then you can decide, which could be better for me like that. The first one we talked about was stocks, which means you buy an ownership of a company. Yeah. So think about it. If today you want to buy a company, do you need to analyze this company?
Exactly. I was going to ask that. Which company can I invest in? There's so many companies. You already said there's S&P 500, but I'm pretty sure there's 5,000 more.
That's right. Yeah, there are many, many companies in the market that you can invest in. And these are just the ones that you can invest in via stock exchange.
Exactly.
Yeah. And you need to know how to read their financial reports. You need to decide whether is this a good company that can grow in the future.
How do I even do that? That takes a lot of time.
That's right. In order to learn about stocks, right, until today I'm still learning. It is a long journey.
But you're Mr. Money.
Yeah, it's a lifelong journey in learning about companies. You can't finish everything. Yeah, and like you say, just S&P 500 alone is 500 companies.
Correct.
So you need to discover many companies.
Exactly.
It takes quite a lot of effort and it takes many, many days to master it. Yeah.
Then stocks is not for me. Because I feel like there's so many things I have to analyze, so many things I have to read through. And I'm a very indecisive person. If I don't even know which one to pick, how can I even get started?
So if you think that this is something that is not your cup of tea at this point of time, right? Then you can move on to the next asset. No? Now you know at least stock may not be in my immediate consideration. Now,
Maybe future.
Yeah, however, I would say that you should be open to learn about it because there's a lot that you can learn, but it takes time.
I see.
So when you're taking time, you still need to do something, right?
That's true. That's true.
So now let's move on to the next asset. No?
Okay.
So the next asset is what we call an ETF. ETF means exchange traded fund. Now, how it works is that, remember just now we said that there are many, many different companies? Now, so what you want to do now is that, okay, I don't want to decide on one company. I just think that generally the market is good lah. Yeah, and I want to participate in the economic growth of a nation. Let's say US or either Malaysia or something like that. I think the future is good. Businesses will do well. Economy is going to be good. So I just want to take part in the growth of it by investing in all their companies.
Within a specific country.
Yeah, within a specific country or within a specific industry or within a specific geographical location.
Wow.
It can be all the ASEAN companies. It can be European companies. It can be AI companies. Yeah, anything you prefer.
So even specific industries like what you say, AI sector also can.
That's right.
Wow.
And you just don't want to choose. Then you can choose to buy something called ETF where you put your money in. And what happens is that as that industry grow or as that nation grow, as the economy grow, over time, everything will slowly go up. By average, you are actually going to make money together.
Sounds great actually.
Not bad, right?
Yeah.
Yeah. So you are just have less headache, less to study.
Yeah.
You just need to kind of know what's going on and you can take your time to learn while you are still staying invested. It's not like I'm learning and I'm not invested. Right?
Correct. I read the news a bit every day.
That's
I kind
right.
of understand which one I should put my money in.
And one day when you're more ready or maybe you got more funds, you can decide to invest in other category of investment.
Okay.
But ETF is average.
Okay.
So it's always average. Return is also average. We call it a beta return in the investment terms.
Then why do people invest in ETF then, since it's so average?
Because average is good.
Why?
Because it is safe.
I see. Oh, like dollar cost averaging.
That's right. It is safe.
Okay.
Now, based on what you say just now, I guess you also want to have higher return than average. Am I right?
Correct.
I mean, who doesn't want higher return, right?
Yeah, especially now. I got no money.
One thing is this. As a young person, you actually do have the time to actually go for high risk.
Really? Why?
Okay, market is always in a cycle. It means today it goes up, tomorrow it can go down, and after it can go up again, and then it can go down again.
That's true.
Generally, when you zoom out, it will be always going up. It just
gradual,
yes,
but
it's just zigzag,
yeah, okay.
like a roller coaster that is heading up.
Okay, I get it, like that.
Get it right? Get it
Yeah,
right? So you just need to catch an average. And because you have a long-term perspective as a young person, if we are talking about a retirement fund, you got the time to actually what we call ride out the market. So this is what people will always say. When you read articles online, when you read about it, they always say you have the timeline to ride out the market cycle. That's what it means.
So the best time to start is to start now.
Oh yeah, as early as possible. Remember just now we talked about all the different asset classes like stocks, REITs, all these different things? You may be thinking to yourself that actually you want to invest in everything, right?
Yeah, correct.
And here is where unit trust also allow you to access into all that. Because when the money is being put with the unit trust fund manager itself, the fund manager will allocate it accordingly. Yeah? So it may end up investing into stocks, bonds, all the different type of asset classes. So simply by investing into unit trust alone, you are able to access all the different asset classes.
So it's like all in one.
That's right.
Okay, it sounds great in theory, but how can I actually hire the fund manager to pick the stocks for me?
Okay, today very easy one. Last time, right, usually in order to buy a unit trust, you need to walk into a bank, or either there will be a unit trust agent or advisor who come and meet you and have a coffee and so on. But I know Gen Z like yourself don't really like to see people.
Correct. And also, to be fair, banks are only open during working hours. When can I go?
That's right. So what can you do today, right, is that you can use apps. So for example, of our sponsor of this episode today, they actually have a UOB Tomorrow app that allows you to invest in unit trust fund just at your fingertips via your phone itself. You don't have to see people, don't have to go to branch.
Really?
Yep. Very simple.
Sounds great, but how much do I need to get started then?
Here's another good thing. You can start with as low as 100 ringgit these days.
Really?
Yes. Using the UOB Tomorrow app is just 100 ringgit a month. You can kickstart already your investment journey.
Sounds amazing. I can use the app. I only need 100 ringgit. But then it's guided by professionals. Do I talk to the professional, or are there any specific locations where I can actually click on the app to buy unit trust?
So how it works is this. If let's say today you want to invest in a unit trust fund, but you also know that there are many different unit trust funds, right?
Yeah.
There's 100 over, 200 over, 300 over, like that.
To me, that sounds like stock picking. Which one do I pick?
So under the UOB Tomorrow app, they actually made it very convenient for beginner and Gen Zs like yourself today. So what they do is that they have this curated, standardized portfolio where all you need to do is just select your risk appetite accordingly.
That's perfect for me.
Correct. So if you say, I want to take more risk, I want growth, they just select the growth one. If you say, no, I don't want to take any risk at all, they select the lower risk one. And they are just going to straight away give you a curated portfolio based on that. And then as you learn later, you can go and choose your own customized portfolio in future.
Oh, okay. So is this a trusted platform where I can actually use to buy my unit trust?
Yes, the name is UOB means bank law.
Oh.
So obviously regulated and also safe.
Okay.
So nothing to be afraid about.
Okay. So it means that I can just start as soon as possible. I just download the app, deposit my money, and then pick according to my risk appetite. And then a fund manager will help me manage, but then I just check as I go.
That's right. Yeah, then along the way, you can learn how to invest in other investment assets as well and learn about stocks, learn about everything. And then one day when you're ready, you can start investing in those things as well. But at the same time, you can kickstart with your investment already. Don't need to wait.
This is actually very simple for someone like me, because I actually really don't like things that are too complicated. Like what I said just now, when I open Google, how to invest, the moment I see all the information, I want to close Google and I want to stop my investing journey immediately.
Okay, but I have to say that even after you do all this, do remember that investment still requires you to learn.
Oh.
And the more you learn, the better it is. So even after you invest via the UOB Tomorrow app itself and invest in unit trust, you still want to get started with your learning journey. Just that now you won't be too stressed. You won't be you're waiting,
Yeah.
But your money is already invested. So it's still growing while you are learning.
Oh, okay. But I also understand that all this sounds great in theory, and everyone keeps on saying, okay, you start investing to earn money. That's how you actually earn money on the side. but I'm pretty sure there are also common mistakes that people make when they invest. And what are the general common mistakes that I should avoid as a beginner when I start investing?
Okay, just now in the earlier of this chapter itself, we talked about having an emergency fund, right? So the other thing that you have to remember is this: do not panic. Do not panic. Sell. Do not FOMO.
How can I not panic? It's an emotion.
Actually very often, right, when it comes to investing, the hardest part is not in the learning.
What do you mean?
It is in controlling your emotions. So think about it, right? You can read the financials, you can read the market, and you can know that, okay, the market is going down. You know what's happening. The difficult part is making a decision during that time when you're feeling like, oh, is the market going to continue going down? Is it going to continue going up? Like that.
Oh my God.
That emotion is what's difficult. And most of the mistake that people make is in those times. So for example, let's say you're invested in the market during the month of April. Maybe you just put in 1,000 ringgit and straight away there was an announcement and the whole market tanked by 20% during that time. And your 1,000 ringgit became 800. And some people will go like, oh my goodness, I do not want to lose my remaining money. So they immediately exit from their investment and sell.
I am that people.
Then you know what's going to happen?
Then I no money.
Today, the market is up again already. If the money is left inside there, the person probably have about 1,100 ringgit or something like that.
Oh, I made a loss.
Yes, but you sold at a loss because you were scared.
Oh.
Yeah, so Chinese, we always say, ting delay, ting delay. So you must relax a bit. When you want to invest, right, the biggest mistake is made when your head is not clear, when you're not calm. So you must learn not to panic. If you want to sell or you want to buy, wait a bit.
Okay.
Wait a bit.
Is that why you dollar cost average? Because it's not tied by emotional factors.
Yeah, that's right. So let me just share with you a little bit, right? I actually used to trade quite a bit.
Really?
Especially in the early days when we started our company.
You tell me you dollar cost average, but you trade yourself.
I trade back in the days quite a lot.
Oh.
Yeah, because the time I got time. That time company very small only. Me and ZK and another one more editor. So we got a lot of time, right? So what we did that time is that we used to trade a lot. So sometimes halfway through the day, me and him will be just trading in the office. And we made money, right? We were very happy. Yeah, and because of our job, it's creating financial content, which means I have all the time in the world to actually study the market, to actually make money from the market.
Oh.
Yeah. Now, then later as business picked up, I started entering meetings very, very regularly.
You have no time.
Yes. So what happened is that I will put in the money in the morning. I go into a meeting. Then I keep hearing buzzing from my phone. By the time I come out, I already lose money already.
Oh no, so fast?
Yes. So that's trading. You miss the moment, you miss the moment. I can't be like a client in front of me and then I like, hey, let me check my phone. I want to buy or sell first, right?
Oh.
So that did not happen. And obviously, I end up losing money quite a bit.
So trading is more for people that have a little bit more time on hand.
That's right. In fact, a lot of time.
Oh, I see.
Now, and after that, I started switching a big part of my portfolio into dollar cost averaging. So I memang already dollar cost averaging. It's just that it's not as big an amount compared to trading as well. So put it not as big, more like 50-50 lah, right? But after that, it's 100% dollar cost.
Because it's not that sustainable for you, considering
That's right.
you're a very, very busy man now.
That's right. Yeah. So after that, what happened is that every month, whether the market is up or down, I don't care. I just put in my money and I just leave it there. And when the market is down, I also don't look. Market is up, also I don't bother. The only time I think about it is because I'm doing content.
I see.
Right? Then after that, about 3-4 years later, yeah, you see very, very good returns.
Okay, so I need to be patient and consistent.
That's right. You're getting the gist of investing. Now, I tell you these two things, patient, consistent. Even if you do not know a lot of knowledge about investing in terms of like what stock lah, all those kind of things, right? You will still make good money.
Really?
Just by having these two good habits.
Oh, sounds easy in theory, but I have to apply and try first.
Yeah. Because emotion, not so easy to control.
I'm a very impatient person, but okay, maybe this will train my patience.
Somehow we are in the content line, right? It means that every week or something like that, you will probably hear Frankie telling you, hey, actually this one,
Yeah.
actually this one, then you start getting tempted.
Yeah, correct. Okay, instead of getting tempted so quickly, I'll put some in unit trust and dollar cost average first. And then if I want to experiment a little bit more, then only I'll look into other options.
That's right. And you slowly, don't rush into it and don't rush out of it.
Oh, what do you mean?
Yeah. So like I say, do not panic buy, which is like FOMO.
Or panic
Do
sell.
not panic sell as well.
Okay, so who lasts the longest is the best one.
Yes.
Oh.
So you always just relax and make your decision when the time is right and when you know what you're doing.
Okay, relax, make the right decision, know what I'm doing. Okay, understand. I will try my best. Okay, since I already got a really good amount of tips for a beginner investor, how I can get started, what is the best for me, especially for someone that has a lower risk appetite. I know to dollar cost average and probably try out platforms like UOB that provides unit trust that is managed by fund managers. So when I get started through there, only I'll try to venture out and see what's better because these are more suited for beginners like myself. Okay, so as usual, we've come to the end of our episode, and if there is one takeaway for our audiences like myself, what would it be?
Since this is a Gen Z podcast, well, the advice that I will give you guys is this: start now, start early, and start with as little as you can, and make it automatic, right?
Wait, what do you mean make it automatic?
Yeah. So in almost every single app today, right, there's auto debit features on. So if you say you want to invest in certain unit trust fund, you can choose to make it automatically investing in it on a monthly basis. So you just set you say I want to deduct 100 ringgit every month, then you just deduct 100 every month automatically.
Also, I don't need like set timer 1st of May. I transfer myself.
Yeah. No need. It will just automatically deduct. It's kind of like installment plan, right? Now, why is that important? Is because it takes decision away also. You don't have to every month go and make the decision again. Because think about it, right? If every month you need to make a decision on whether do you want to buy or sell, right? Is it very tiring?
It is. It's mentally draining.
That's right. So you leave it, close your eye, you wait for half a year, you see one time.
Okay. So I just check periodically.
That's right. You just need to, from the start, the time, make a good decision, then you leave it there.
Okay. I understand. So it's not get rich overnight. Be patient. Let the money work for you, and at the same time, make sure it's more streamlined also.
That's right. Yeah.
Okay.
And during that time, still keep learning.
Okay. Still keep learning so I can improve and invest better in the future.
That's right.
Okay. Wow. Mr. Money provided a lot of very great money tips.
Hopefully it helps you guys to grow into adulting. Yeah. And your adulting journey will be a rich one.
Hopefully I can be Miss Money.
Anyway, for those of you out there, if you're interested in actually investing in unit trust, do remember to check out our sponsor and our partner for this particular video, which is UOB. Their UOB Tomorrow app allows you to invest in unit trust fund seamlessly, easily, without needing to go to the branch or meeting people. And right now, they actually have a campaign going on. Up till the 31st of October 2025, all you need to do is complete 3 simple challenges via the UOB Tomorrow app. And the first 20 people who complete it every month will receive 200 ringgit in their United CIO Growth Fund. And that's not just it. At the end of the campaign, one winner will be picked to receive a fully paid trip to Hokkaido. And you don't go alone. You get to bring someone to go along with you.
I can go on a bestie trip
Yes.
to
or the
Japan.
partner, whatever lah. Yes, bring whoever you want.
Fully paid means plane, accommodation, even transport there also.
Yep. So what happened now is that you get a chance to save your money, invest your money, and at the same time, have a chance to win a fully paid trip to Hokkaido.
This is a win for me.
Yeah.
I earn money and also I maybe earn trip.
Yeah, maybe a trip.
Okay.
So for those of you who are interested, go and check it out in the link in the description.
Thank you so much, Peter, for being on Figuring It Out. And thank you so much for teaching me how to invest, as well as our
You're
audiences.
welcome.
I hope you guys learned a lot from Peter and you can actually start investing now. If you don't know where to start, you know where to start now. Start with UOB. Okay, but if you have questions, you can actually head over to our Reddit page and we'll try our best to compile our questions and answer them in our further episodes.
Oh yeah, you have been doing that, wherever people ask you a question on Reddit and then you make it into another episode and reels, right?
Correct. I think our audiences has actually preferred that way of content. So I hope that you guys will actually comment more.
Yeah.
If you have any questions, don't keep it to yourself. We'll try our best to help you.
That's right. You can ask all sorts of questions about adulting.
Yes, correct. It doesn't only have to be career or finance, but if you have any questions about adulting, just comment there. Okay? And don't forget to follow our Instagram at figuringit_out.pod and follow Mr. Money himself on Mr. Money TV at Instagram. And that's all we have for today. Thank you for listening. Bye.
See you.
We're just